Good morning, everybody. Happy Friday. All right, markets finally came out of that coma they were in and moved up. Grateful for that. And now we have new reference points and some new messages about obviously what happened and what might happen now. Good morning there on YouTube and Facebook and so on. Glad you guys are all here. So the S&Ps broke out of this trading range. And part of our systematic method is update information based on price action. And so now it has made a higher high. This becomes major support and very significant major support because it spent so much time here and retested this area on SPY, and we look the same thing on SPX. And on a short-term basis, we'd not want to see prices come down, retrace down to these small bottoming tail bars on the daily chart, and you can see the base on the hourly chart. So as prices extend, it creates price voids. And I should have marked this now that it cleared this area of resistance. That becomes what we call minor support. Ideally, prices hold here. It's Friday. It's options expiration. Who knows, what kind of wild moves could possibly happen after this. And so we'll see if it keeps going. The next reference point, as always, we look to the left, assuming this is going to close, right? Assumption it closes today above this area, and above here. Well, last week's low becomes our reference point of support on the weekly chart. And since this is a breakout bar and it went sideways for a month and a half, so that's a breakout bar, that low should not be violated on a short-term basis. Prices should grind around, do whatever they're going to do, and work their way up toward 430, the next resistance area. We don't know if it will, but what we know, right, based on our objective approach, is that if it retraces, ideally it's going to hold this minor support, give or take. If it breaks below here, that's going to be the start of something's going wrong. And of course, down below major support, it violates the uptrend on this time frame, and the short-term party, right? Wherever it gets from there, it's over. Okay, so that's our plan based on SPY, and what we have here pre-market prices are holding up quite nicely after the run-up. Now, I mentioned a few days ago, right? Sentiment was finally starting to creep its way higher, and it's not here yet. Breath is god-awful terrible for a market that's breaking out above resistance. What we want to see in a situation like this, based on historical reference points of what typically happens after a period of consolidation, prices go up for like this 2 days. And what happens in a strong market, see like this right here? That's what it does. It goes from a bearish, or from a contrarian point of view, right? The breath is bad down here, and it rips right up to the red zone. And in other words, you've had broad market participation of the number of stocks that have been moving up together during this move, and that's bullish. And then the expectation is, okay, things consolidate. Didn't mean it would consolidate as long as this did, but they consolidate for a while, and then a short period of time, and then eventually they go higher. And what should have happened over these 2 days is breath should have ripped up here toward this 200 area, and it hasn't. And so as you could look at this, and I'll show you in some different ways. Is it here? That's not the one I wanted. That's not the one I wanted. Intraday internals. Here we go. Look at this. Yesterday, as prices are breaking out, this is advancers minus decliners. It's not an advanced decline line. It actually went down, and option buying picked up in calls, moved lower. This makes sense, right? As prices are going up, more call options are going to be bought. Yeah, of course. If it continues higher today and we get a close down here, that's going to be the start of, hey, heads up, risk is growing, but we've got all of this support now that's been created. And why? We're saying, hey, this is major, super major support, and ideally it should not break below here. So objectively, this is what should not happen. We don't have the confirmation of what's happening under the hood. Um, so we're not dealing with a bull market, so to speak. You could say, okay, this is bullish that its prices are going up, but we know what's actually happening under the hood here, that it's not as strong as it appears to be. What would cause participation to be low, Robert? Well, it's the same thing that's happened in the past, of that, the money is going into institutional leaders, NVIDIA, Apple, like Microsoft, and, that's the primary drivers of what's moving this market. We know that financials have done poorly. Things moved up over the last few days. The banking situation, some reprieve from that. So regional banks moved up. Biotechs moved up. That lifted the Russell, which has been doing terribly. Taking a look at that quickly. The Russell down here. So that's still, looks pretty terrible. It's just in the trading range, but it moved up because of banks, regionals moved up, and biotech moved up. So that's a positive. But if you look at regional banks, they're still in a bad downtrend, and there'll be a retest. And so, that looks great. Now, some of the more interesting. Well, let's get to SPX and get that out of the way. So we can see, as we always do, where prices, and they're gapping up a little bit above the high here. So 2 days up, it's not a huge gap. If it was a big gap, it would definitely be sell the gap up. But it's not a big gap, and so it could push higher. Let's see, it's building the support area. So looking at this intraday, it's got a nice little support area. If it can hold that, if it does, something's starting to go wrong. And as you can see where my cursor is, it's yesterday's close, which is what this area is. You can see the cursor there, give or take. So, all right, could go higher to where? Well, it's got open air up there. It's got a void. Looks pretty good. All right, SPX. When I was looking before, I didn't check just before I came on. Let me see what. So things moved up a little bit. Jake's got 41.60. I had put down 41.55. Things moved up. So the premium here probably, I'm sure it got a little lower. So 41.60. And again, these things are relatively close. And since they moved up, I had 42.50. Jake's got 42.55. So as things moved up, more premium, some premium here goes away. So you got to go a little higher. And the premium here increases. So you go a little higher. And 42.55 should be okay today. That's a pretty good distance from here. And let me just look here again. I hate the way TC closes this information on the option activity a little bit before the open. Okay, so 41.50, but these expire in 28 days, not today. But 41.50 has relatively equal open interest there. So 41.50 should provide a good support level, besides being yesterday's low. The open interest in puts and calls, but they're out to next month. Yeah, or the highest, 41.50 expiring today. It's not as high, but it's a decent number. So 4150, again, being yesterday's low, first reference point of support. It's, below yesterday's low was 4153. So whatever happens today, 4150 should be a good level of support. Well, there you go. All right. Other things that are happening here, right? Markets are saying inflation, will it worsen? Why? Well, we go back to the theme we've been talking about for over a month, and look at what's happening here. The 10-year broke out. The 30-year moved up before this. So interest rates are moving higher. So this debt ceiling thing, it's kind of like the markets are, we're all here to make money, but the markets, I would say, look at that from a point of view of almost in an evil way. Like they'll walk over your dead body to get that dollar. So they see this, blinking here, and liquidity will come into this market again. It's going to hold the market up. So interest rates start going up. The economy will be okay, maybe even get a little better. Consumers will spend money. How the hell is inflation going to come down? So that's something we need to be concerned about, that inflation numbers start getting worse. Right? They're only down at 5%, so they're still terrible. So I don't know, they're waiting to see if things are going to, improve. Well, let's see. This is saying maybe not. So keep an eye on this. We will. Even yesterday, if you look at Fed Watch, there was a shift at the end of the day from, like the pause situation, or a very low percentage possibility of increasing another quarter point, to that moved up a little bit. So a lot of moving parts as always. But, interest rates moving up here. The markets are moving up. We'll see if that continues. And look at the dollar. That wasn't a good thing last year. Markets don't care about it right now. We've talked about the volatility index being at a low level where it's moved up before. So while price-wise, things look pretty darn good, as always, have your stops. Just keep an eye on the exit door, because things can shift pretty quickly. All right. NASDAQ, that breaking out above, these are the futures breaking out above this prior pivot high. There was that month and a half of going nowhere. Things finally moved up. They're a little extended here on a short-term basis. And let's look a little further to the left. The next level is way up here. And so we got a breakout bar, same thing as the S&P, but in a different way. It better not come back down here. We got a little void, little corrections along the way are fine. Some kind of pullbacks, that doesn't violate anything. But as things begin to accelerate, and there was a wide range bar yesterday, it's coming up to a whole number. Let's see what the Qs look like. It makes sense that prices are likely to at least stall, and the momentum to stall for a while going into next week. And so now we have to shift this. And this is a very significant support level. And the next resistance level, it's got room to move up. Right? So price-wise, things look good. Breadth-wise, things look terrible. So we need to see some other sectors start to participate. And there's still we're finding plenty of patterns that still look bullish, like they can go higher. I mentioned yesterday, it's really what's called a stock picker's market, because there's stuff that's just outright garbage. And, the markets did nothing for quite a while. And now they're moving again. And let's see how long that continues. And we'll see when sentiment comes up in here. And I suspect as long as these markets go up, this is going to peg this area by next week, maybe by the end of today. And as you look at transport. So when you see interest rates going up to suggest, well, more than suggest, what it tells you is that the markets believe that the economy will do better and there'll be an increased demand for money. Well, other things you can look at is transports. And are they beginning to improve or move up? Well, they're kind of flat here doing nothing. But if you look at, I have it here. I don't think so. But if you look at the airlines, right? Wide range bar, they're at resistance here. If these are going to start moving up, right? Transports, you want to see things like FedEx moving up and those type pieces of information that would be supportive of, hey, the economy will do fine. Well, if the economy is going to do fine, well, that's good. How are you going to curb inflation? Because the whole idea behind raising interest rates, the Fed raising interest rates, is to decrease demand and make things worse. So it's going to get interesting. It's always interesting, or more interesting. All right. We looked at interest rates. I showed you the dollar. Oil doing nothing, pretty much. So this would be another piece of the techno fundamental puzzles and inflation. And so does oil begin to break out above this range? I got a little alert there. So it's not moving, but we'll see what happens there. Bitcoin, it broke down. It's just sitting there doing nothing. Will this start to move up doing nothing? And, the market's moved up and this tends to move somewhat with it. That's not happening. The Dow, coming back up, just a terrible pattern. But that's not breaking out. So, and no interest there, but maybe individual stocks. Even as looking at other pieces of the market, I mean, that reversal in Home Depot. I can bring this up relatively quickly so I can pass it on to Dan, but anyway, take my word for it. Amazing reversal yesterday in Home Depot and Cisco. That was another big reversal. I got to contact them. I don't know why this is taking so long to fill in, but anyway, you can look at on your charts and see that. And other than that, gold is not going to do well when the dollar continues to move up. And you remember a few weeks ago, everybody was calling for the dollar is going to crash, and now look at what it's doing. And we looked at jets, and good things happening as far as tech. Look at semiconductors. Maybe they're a little ahead of themselves, but so lots of positives. And as always, there's flies in the ointment to keep an eye on, not to become complacent. And we'll see how things shake out today and into next week. All yours, Dan. Yeah, Frenchie, commodities have not been doing well. You can see they've been pulling back. I just saw your comment there. They are near support here, so that would be something else to see if they begin to move up. Wheat, corn, and so on. Oil.
All right. Happy Zero DTE Friday. Let's see if we can find some of those, but it's been more difficult with the VIX so low. VIX here under 16 now. With never a shortage of finding patterns, but Greg was trying to show you Cisco. Look at that. That looks like a bad print, and it is not. That thing just ripped yesterday morning at the gap down. You know what, Alex? I read that article, parts of it in the journal, and I think it's very misleading. And here's why I say that. And then here's Home Depot. Here's why I say that. They're like, oh, housing prices declined 1.8%, the biggest in 11 years. And I'm scratching my head and I'm saying, a big friggin' deal. They're up 33% in the last in the last 3 years. So a 1.8% pullback is nothing. And that's supporting what you're saying is, what are you talking about? Housing just sticker shock like everything else. So yeah, here at Home Depot, that had a nasty gap on earnings, and then the very next day just blasted through it like it wasn't even there. Let's check out a couple earnings here. We're at the tail end of the season. AMAT, we were looking to do a call spread. It's just, that's my MO when things make a massive move into earnings. Alex, remember you were talking about ending volume? That's a picture of an ending volume, even though it could have been up one more day, because this went vertical on that volume. That's a lot of late people to the party. So this is a definite zero DTE candidate. I'm going to put that in a window because even with the low VIX, earning stocks should be better. This was the only official earnings trade we did. We shorted a Condor, so the 111, and we only did $2 wide and took in 67 cents. So if you do the math on that, that's a potential 50% return. And then we did the 94s, $2 wide, and gapping down here a little bit, but that's a home run short option trade. Glob 157, big gap, short-term extended, flow, bearish gap, but that's a big old gap. Wow, that's gapping under the 200 here. DXC 2250, no pattern. QFin, this looks lower all time frame. So this is not down a lot. So this is a tier 1 candidate. The short, maybe a 10-minute low. I'm going to put that in a window. QFin for day trade. Fitch. I personally sold the $4 puts for 17 cents. Alex bought the $4.50 calls as a directional, and he's getting paid beautifully right now. So yeah, it's a good job there. Deer 385, big old gap. So obviously, look at the cousin. Cat's actually a better pattern. Hey, there he is. Cat's. Let's put Cat's a definite put spread candidate and maybe directional. RBC 228. A nice bottom here. I mean, people who say charts don't work, they're denying reality. Look at every one of these pivots where buyers stepped up and paid these prices. So that's what's called demand. So that looks fantastic for a put spread too, over maybe 5-10 minute high. Earning stocks are just going to let them stabilize. 3488. I mean, this thing's in a death trend, and it was gapping down earlier. Possibly a zero DTE put spread over 10-15 minute high. See if there's any juice down here at the pre-market low at 30. Florida getting whacked. Look at that, down to, that's gapping 25% lower. And that, I don't know how many decades this thing's been in business, but it just totally shocks me that you can have that the market and the analysts could be so far off. I mean, what happened? What happened in 3 months? That you're gapping down 25%. So it's a big gap. It's a big gap, but I'm looking at it as a 0 DTE put spread over a 30-minute high. Delta 20 asking about Cisco. I just talked about it already. That's what I call a bear gap that bullies. So it's bullish as can be. If we get an inside bar today, Delta 20, the next week it has a void for a directional trade and a put spread. Jose here on YouTube, OPI. Yeah, that's a definite bottoming pattern, retest, 1, 2, 3. Yeah, that looks good, Jose. PNC is a 1, 2, 3. Yeah, the banks had a nice bounce back. VMware, sloppier, but put spread idea, AL. Day trade, maybe. There is a void here, but it's sloppy. I mean, day trade at best. I had, look here, I have gold talking about 1, 2, 3s in the banking sector. Here's 2 more. All right, Goldman, look, that's a 1, 2, 3 from a W retest with a void. So Goldman looks good. Morgan's CEO stepping down. Don't like that one as much. Look at the XLF yesterday. I was hoping it was going to be a little 1, 2, 3, but it's squirted here into the close. But Goldman I like. QBTS. 61-cent stock, bottoming pattern, not my style. QFin. Yeah, I posted QFin, Alex, 10-minute low is a short. I put it in a window. Oh, our Rost here, I see another little leg down, but we're short the 96s. So provided it doesn't, friggin' fall apart at the open, we're still totally fine because it's 0 DTE. That's why I like the shorter the better on these earnings, because let's say hypothetically we did the 8 DTE, then you're not going to have nearly the amount of volatility crush because you got 7 more days of time. I guess I had crowd up alarm go off. We have a put spread on this. So let me just reset my alarm. We're long this. I set an alert earlier. SPY G, I said just sell a third at this opening gap up. All right, see QFin, shoot, it's dropping too much. See, that was a tier 1 short for me. If it just bobbled around for 5 or 10 minutes. AMAC gap down, and I see it selling off. So that was a call spread idea I mentioned. All right, crowd is doing well. Wow, crowd's ripping. We might have to close this thing in the strength. Let me check the premium. I got us at a half yesterday, the put spread. Now, you remember the other day, we only had 1 open position. 1 open position in the weekly options trader. Yesterday, we had 10 open. So that just illustrates when we see things, I mean, I'm going to overload you. All right, the $94 puts on Rost. They're spready. Oh, wait, I'm sorry, the 96s. We're trying to close. All right. So they're 20. We got a huge open gain. So everything looks fine. Hopefully it'll just bounce up a little bit here. All right, KRE, Thomas. Yeah, banks are bouncing a little bit. K-Web is, look at, oh, that's China, that's not it. That looks bad, that China thing. That's 96 puts. I'm gonna bid nickel.